It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? This is Darrell Martin, your host with the Diagnostic Trading Hour here on TFNN. Don't forget, you can also catch us anytime you want to on your mobile phone at tfnn.mobi. And if you have any questions, feel free to give us a call. You can call us at 877-927-6648. Or if you're outside the U.S., give us a call at 727-445-1044. Let's go ahead and do a quick market wrap and just sort of see where everything is sitting. And right now we got the S&P basically unchanged on the day. Had it drop down, pulled back up, despite some bad economic news, and looks like it is heading back down now. But right now it is up 1 point from the close of yesterday, with the Russell 2000 up 5 points and the NASDAQ up 8, and you got the Dow up 9. We got oil is moving quite a bit today, up 94 cents so far. Natural gas up 0.078. And over on our agriculturals, we got corn up 10.25 and soybeans surging back up 32.5 points already on the day. And over on gold, it's up a mere $3 on the close. With currencies, let's go ahead and check that out. We got euro dollar down 42 pips, pound dollar literally flat on the day from the close of yesterday. Aussie dollar up 7 pips. U.S. Canadian up 32 pips, and U.S. franc up 25 pips. So that's our market wrap right there, just to sort of keep you up to date again on everything that's going on in the market and where everything looks like it's heading. And one of the things we love to do over here on the Diagnostic Trading Hour is check out Nadex. So if you haven't traded Nadex, and what you want to do is you want to go over to tfnn.com, and what you'll see is over here on the right side, you're going to see a Nadex banner. Click on that banner right there. And when you click on that, you'll be able to open a Nadex account. Just click Create Account. And you can get a free demo account, and you can test drive it. They give you $25,000 of funny money to play with just to see how things work. And so just click Open a Demo Account. To open your live account, click Start. And it's very fast. Literally takes just a few minutes. And you can get started trading. And all you have to do to start trading with a live account is make a deposit of $100. So on the test drive account there, click Open a Demo Account. And just fill in your username, first name, last name, phone number, and email address. Once you fill that in, click Apply for Demo. They'll send you a password, and you're able to log in. And then what you'll do is you'll go over here to log in. Again, that password is going to come directly to your email. Then just log in here to log into Demo for your demo or Live for your live. And you can do the same thing over on your mobile phone on the Nadex app they have now that works on Windows Phone. It works on Androids, and it works on an iPhone. And you can even sign up for a Nadex account right there. For the demo account, you do need to go to tfnn.com, click on Nadex, get that demo account set up. But for a live account, you can actually set it up right there on your mobile phone. So, got that wrapped up. Want to check out some possibilities on some trades and what all is going on. Again, oil, not oil, but oil is moving quite a bit, and gold is up again a few bucks on the day. So, before we check that out, I always like to do a wrap up on the current fundamental indicators, basically what came out today and how did it look. So looking over at the USD, we had the core CPI was actually a little lower than expected. And core CPI is basically the price inflation index, not accounting for food and energy. Obviously, if it was accounting for food, it would be looking at rising with the rise in corn and soybeans and all that stuff, which is going to lead to a rise in all your meats as well. But that came in a little lower than expected. And not a lot they can do on that when there's deflation. I mean, they can't really lower the interest rates to spur more inflation. So that doesn't help out with the possibility of a QE. And we also had the CPI month over month. That, of course, also came in a little lower than expected. And literally at flat 0 versus 0.2. And 0 is a little bit higher than last month, which is at -3. And we go over and we also had at the exact same time, 7:30 Central, 8:30 Eastern, we had the Empire State Manufacturing Index. That's where they survey about 200 different manufacturers in New York and asked them to, basically talk about business conditions. They asked them questions about activity, spending, hiring, investments, their outlook, and that actually came in negative. So that was not a good thing for the market. And after the market opened, we had a long-term purchase on the TIC there. And then we had capacity utilization, industrial production, and the housing market index. And then 9:30 we had the crude oil inventories. Crude oil came in lower than expected as far as the amount that they have on inventory. And when that number comes in lower, that usually drives oil higher. And we can even see that if we go over and we look at the oil charts and sort of see how that played into the day. And we look, the report came out right at 9:30. And again, inventory is lower than expected. Oil shot up right away. And it stalled out for a little bit and then took another shot right there just before we started the show here. Climbing almost another, looks like about 50 cents to $1. Right in there, about 70 cents more after about 11:50 Central Time. And so that sort of wraps up the news for the day on the fundamental government news announcements. And if we go over and we look at what's coming up tomorrow, always going to be prepared. And, again, today being the 15th, we have, remember, a French and Italian bank holiday today. So that stunts volume in addition to everything else. But those are shut down. So we go over and look at the 16th. Everybody opens back up. Things get moving again. And here we're going to have, it's Thursday, so we're going to have our unemployment claims. At the same time, though, we're going to have building permits. So basically it's a gauge of construction activity and permits being issued for constructing new buildings. So that's going to be an important number to look at for, the health of the economy. And again, that comes out the exact same time as unemployment claims, how many people are filing for unemployment. And then we'll go down to 9 o'clock. We're going to have the Philly Fed Manufacturing Index. And so that's going to be about the same thing, 250 people, as we had today. 250 manufacturers will be surveyed in the Philadelphia area by the Federal Reserve and, asked about spending, hiring, and investments. So we'll see how that compares to today. And then that basically is going to wrap it up for the U.S. announcements for tomorrow. And on Friday, it's going to be a pretty quiet day, but we will have the preliminary University of Michigan Consumer Sentiment Report at 8:55 a.m. Central Time, 9:55 Eastern Time. So just tab those on your calendar, make sure you're watching them, make sure you're ready. And again, those are just the U.S. reports. We also, of course, got the ongoing European reports and any kind of news that may come out of Europe on that. And looking over at things, noticing oil has moved. One of the things I always like to look at that we talk about a lot is standard deviation. So let's go ahead and check out the move on oil and see how much move it's used up for the day. And what kind of drop back down, if it's maxed that out, that we could expect. So on oil, we got 95, let me see here, I'll do a quick calculation for you. I'll do the math, keep it easy. And so let's look, we have a $1.35 standard deviation on just a 1 standard deviation move. And if we go over and we back out, we want to look at oil, okay? And we want to go, okay, well, what was the closing price of yesterday? Well, closing price of yesterday, so again, I'll put this right up here, make it easy. So $1.35 standard deviation level, $1.35, and then we got a close at 93.33. So what we do is we go in and pull that up, and we'll put in 93.33. And so that's the close of yesterday. And then what we're going to do is we're going to pull up one more calculator, and we're going to add it on to that level. So if we got 93.33 plus 1.35, basically expecting to move up to 94.68 on oil. And if we go over to oil and we look at it right now, we got to move up to a high of 94.46, so pretty close. It's not always going to hit that full amount, but we definitely got very, very close to that full standard deviation move. And so now we want to go, okay, well, if there is going to be a drop in oil being very close to that standard deviation level, what kind of drop could we expect? So we want to go over and we're going to look at, okay, well, what's the high? Again, the high is 94.46. So 94.46 minus $1.35. Well, that put us back down to 93.11. And, if we go, well, maybe just want to look at a half standard deviation level, then we'll do the same thing. We'll take the high of the day, 94.46. And we're going to subtract that off of, half of 135. So you could go in and you can do the math. You can do 1.35 divided by 2. So we got basically 67.5 cents. So we'll just say 68 cents to make it easy. And again, take that high, 94.46 minus, and then just 68 cents right there. And so 93.78, and that puts us at where basically we should expect to move back down to on a retracement from the standard deviation move without anything else, causing the oil market to keep going. So if we back on down and look at the charts and go, okay, well, what's going on in oil now that it's hit that level? It definitely is stalling out, so could have a potential play. So the next step would be to go over, okay, well, if I want to do this trade, I mean, oil definitely did, go through the roof, and, flew pretty good right there, based on those 2 time announcements. What kind of potential trade could I have on oil? And so I'm going to want to log in and look at the Nadex platform and see what's available. So I'm going to log into my platform, we'll pull it up, and we'll check out any possible plays. All right, so logged in, I'll pull up the Nadex platform here right in front of you, and we'll check that out. So we got this, and what you're going to do is you're going to go to Commodities Bull Spreads. Under Commodities Bull Spreads, then you're going to find oil. So if you click on oil, then you see the expirations, the times that are available, and you're going to want to find one that is going to be closest to where you are currently trading, okay? So where the market's currently trading at. So the market's currently at 94.31. We'll want to find one with the lowest risk possible to 94.31. And so let's see, we got 94.50. That's a pretty good one. So open that one up. We'll keep that one on our radar. And then I'm going to go over here and check out some of the other ones that are available. And we got another 94.50. So we'll pull that one up. Keep that one on the radar there. And then we'll go down here to the 500-point wide ones, 95.50. That's going to bring us quite a bit more risk. By putting it further up, I'll go ahead and show you. I'll pull that one up. We'll see exactly how it works out, and let you see what the possibilities are. So again, we got oil trading right there at 94.34. So if we were thinking about a retracement, then what could we look at? Let's look at if we added one contract, not just one on here, so just to check it out, compare them side by side. You can see that one over there that's up at 95.50. That gives us a $120 minimum risk. It does give us a higher profit potential, but it's all the way down to 90.50. We really don't expect oil to drop down to $90.50 today. Without some other, just crazy news announcement coming out, that is just not an expectation. So even though the potential's there, is the expectation there to get that potential? So no. So why take on the additional risk if you don't have the expectation to make the additional profit? So we go ahead and we knock that one off the list, and that gives us 2 spreads we'll have to check out. And on this right here, you can see both of them have a ceiling at 94.50. Okay, and they both are going to expire. This one expires at 2, this one expires at 2:30, so this gives us an extra 30 minutes. So for that extra 30 minutes, we're basically paying $3. I'd probably pay the $3 to get the extra 30 minutes. So that's just more time for you to be right on the trade. And so if we look at that and we go, okay, well, now we got this trade right here, and that basically just narrowed it down for us. And we can go and we do 1, we can do 10, whatever. So let's say we do 10 of them, that's a $310 risk. That's only a 30-cent risk, okay? So if you're going to go trade an oil future contract, you do 10 contracts to equalize it. That basically make every tick equal in value, being $10. Okay? So when you come back, we'll go ahead and look at placing that trade. I'm going to go ahead and put it on right now, though, and we'll wrap it up and summarize it when you get back, right after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour. Do a wrap up here on our oil trade that we put on. And what we did is basically looking at oil possibly maxing out that standard deviation level. So we're going short oil. And we went out short 10 contracts on the Nadex spread of 91.50 to 94.50. And basically what that does for us is we won't lose any additional money above 94.50. But just in case, okay? And by the way, 94.50 means it could go up to 94.50, 95, 96, and we've capped our risk on the trade. We won't lose any additional amount of money. And if by the end of the trade, by expiration at 2:30 Eastern there, it comes back down to where we sold it, then we're break even. Anything lower than that, for every tick below, we're making $10, okay? But just in case, let's say oil has decided to keep moving higher for the day, and we don't want to be wiped out, have a total loss in that trade. So what we can do is we can actually go in and we did a binary. So on the Nadex platform, you just go over to Commodities Binaries, Crude Oil, and we pull up the daily contracts. And then on the daily contracts, I saw a 95.50 right here, and priced at a good price. We got it at $13, at 14 right now. If it keeps moving up, let's say oil expires above this price at $95, then it'll actually more than cover the cost of our trade. So I'll go ahead and put in there. We did 4 of them, okay, and we actually bought in at $13. So that gives us a $52 risk on that hedge, but it'll actually make $348, which would more than make back the loss. If we were to take let's say a total loss on this that expired above 95, then we'd actually make $348 on that binary trade in order to hedge ourselves off on the risk. And so, obviously a very, very helpful thing to do anytime that you're trading, is just to put it all together and sort of see, where things are going. So now what I'm going to do is we got one of the questions over the Tiger's Den to check out Apple. So give me 1 second here, and I am going to pull up Apple and see where the bias is and where it's heading. And I'm pulling that up on our charts. Let's see. Wow, we definitely have actually a bearish time right here, but it's just started to make a potential breakout right there. So we can see is that I've had a bearish sentiment on it basically back since, let's see, about April 17th. And so short right there, took another short right there, and just got a long bias, literally just now. So long bias kicked in on the 9th of August. So it is getting hit today. But as far as the longer term bias right now, I do have a long bias, but you got to remember we are really approaching that high right there. And I'll even pull up a little easier to pull up a big chart here. We'll go in, pull up Apple, and we got our all-time high, looks like right there, up at, let's see, 644 on here, depending upon exactly how you're charting it out. But really looking at an all-time high, and I want to pull out an all-time on 644. Yeah, okay, so that's right on the money. So we are not that far from an all-time high. And also one of the things that I like to do is pull up implied volatility, look at the chart on that. And so we can look at the implied volatility. Implied volatility is really low, okay, in comparison to how it's been historically. So they didn't even have that much on this last dividend payout here. On this earnings announcement, it dropped way off. It's been dropping off. And if we go back to this earnings announcement again, you get this big volatility crush on the options. So it's one of those times that if you are long on Apple, you always want to buy cheap. And so calls would be a cheap time to buy right now historically based on the implied volatility there. So on Apple, we are looking at a potential spike up. And like I said, we do have a potential bias right now to the upside. I don't actually have an entry order at the point. If I was in this trade and I was long at the moment, then I'd probably be having to stop around 824.22. So that's about where I'd be looking at my stop on the trade at the moment. So just depending upon how long you're looking at placing the trade. And let's see here. Let me turn that off. And what I want to do is also go in and look at just intraday for some intraday look on Apple and see if there is a potential setup there. And so let me pull up my charts and we'll get some details for you and see what information we can pull together. All right, here we go. All right, so I'm going to update this, and we're looking at about $1 or so on this. So I'm going to update this to, and we'll pull this. This will take a few minutes for it to load, so I'm just going to set it there, and we're going to come back to it and close that out, and we'll pull it up. Let's go ahead and check out also the standard deviation on Apple right now. So good questions. Love it when we get to pull up some different things on some stocks. We had some Met questions yesterday, some Apple today. I'll pull up the standard deviation level, have that chart loaded for you right when we come back from commercial break. Stay right there. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour. Just going to wrap up on that Apple trade. Looks like a half standard deviation move down would be 628.46, and a full standard deviation move, which is an expected move inside of Apple, could actually bring it all the way down to 625.22. And we have had a short on Apple basically for a good chunk of all of today and since middle of the day yesterday about 11 o'clock. And I've been short on Apple as far as, again, short-term trading, so intraday trading there. And so, yeah, definitely keep your stops tight. And if you do want to hedge your trade, you do have a lot of options. So if you do have a bullish, again, long-term, I have a short-term right now, I have a bullish sentiment on the trades. And you could go over and you could actually analyze, check out possible trade setups. And so let me pull that up and we'll look at it and check out some possibilities. And you can go over here and you don't be looking at 30-day out options. And so you could go in and you could literally just hedge it with a put. You could do out of the money puts and the money puts. There's a lot of different trades you can do. You could do iron cockroaches, butterflies, and there's quite a bit you could do right there. So if you definitely have that long term. If you're looking at putting a stop in right around, let's see, we're looking at a stop of around 628 to 625. You'd be looking at about $14. That's pure extrinsic value. So you may not want to be taking on that much additional risk. You may just want to get out of the trade if it hits your stop. But that would give you a hedge for the next 37 days for, let's see, $14. Wouldn't cover about $4. That's give about a $19 risk per share on the trades. But if it does fall down, then it would, to hedge you for that. So you got to look at your options, see what's going to work out best for you. And, you can even get it cheaper if you go in the money, but then, of course, you can't make any money until it goes above it. So, and, pays for any of the extrinsic value. And one of the things when I'm checking out options over here, I will go in and you can customize this to show what you want it to show you. So one of the things you can do is you can go in and you can look at your extrinsic value and add that on. And you can add in your intrinsic value and add that on. And click OK right there. And then what that lets you see is, okay, these options right here have a lot less extrinsic value, but you have to have a lot more move to cover it. So you'd be talking about moving up really $28 before you start making anything on this trade. So, you got to figure out, what's your best risk-reward scenario. What I like to do whenever I am going in and I'm, I like to do a caller versus just a put. And the reason I like to do callers, I do what's called dynamic caller. The reason I like to do dynamic callers is because if you just do a put, to hedge your long shares, then that basically is like taking insurance on a house that you own, okay, and putting insurance on it, but not ever renting it out, all right? And so I like to help pay for that, right there. So what I do is I go in, I like to sell a call to help cover some of the premium on my put. Now, selling a call, of course, will limit your gains during that period of time, but if it drops down, you can always close the call out, capture that profit that helps pay for a lot of the put premium. And so, you could put, say a call over here. You could, let's say if you bought the 625, you might want to go in and sell, like S640. So, and that would cover a majority of the cost on there for you and reduce your risk quite a bit. And only give you a $7 risk versus 14 plus, basically 5. So really almost a $20 risk. And cut your risk down by a third. It does cap your profits on the upside to $10, but hey, $10 a share, not a bad deal. And of course, if it the higher it expires, you get to keep that money. And so if it goes up $7 from where it's at now, then, or even less than that, if it goes up only $2 from where it's at now, then you don't lose anything on the caller. And I like to get in when obviously you only want to do a caller when you are either bullish or if you can do an inverse call if you're bearish on a stock. And I like to change them dynamically. So every time they actually move a standard deviation, I'm going to actually change that. And that's going to take out about half my profit. But ideally what happens is I'm able to move up my callers. And, I'll roll up my put, I'll roll up my call. And so on a $10 move, that may cost me $5. But I constantly have that protection on there. And I don't limit my ability to make money. So I may only make 5 for every $10 up move. But I can ride something, up $100. Hey, I make $50 on it. But at a very, very small risk, maybe a few dollar risk. And, of course, as soon as you're able to roll that caller up above your initial entry price, then you're starting to get to a point where you're no longer risking additional capital because you've locked in profit if it keeps, moving for you. And, so depending on what report you read, the valuation could be as high as, over $1,000 on Apple. Just depending upon, how they're able to keep up. Google has their big thing coming out. They're going to release a big phone thing. Microsoft's bought a lot of stuff. So a lot of other players are starting to come in to the market. We'll see how Apple can keep up. They've obviously been the leader in the phone market and in the tablet market. And Windows, of course, trying to get in on that territory with their new Windows 8 that's going to launch out in October. And then, of course, Google's starting to acquire companies like crazy to be able to lot some things and get it going. So just keep all that in mind as you're checking it out. And you'd only use a dynamic caller if you owned a stock. So otherwise, you could do calls. Again, now you could do credit spreads. You can do butterflies. You can do broken wing butterflies. You could do 1-2-1-1s. There's a lot of different strategies. There's over I personally know about 40 strategies that I actively have used, and then there's about 70 of them out there. And so let's check out a couple of the other markets. But again, that's Apple. And if you got any questions, feel free, again, to give us a call. And I'd be happy to take your questions, look at any stock, future, Forex, whatever for you, and option trades, that type of thing. You can just call 877-927-6648. And we're going to go ahead and look over at some of the other markets, see what's going on. And right now, just to get a quick market wrap, we still got the S&P flat up a point. We got the Russell up 4. We got the NASDAQ up 5. And the Dow still just up 8. Oil is still about $1.40 or so, so not doing a whole lot. But if it does keep moving up, that could be a good thing because, again, we do have some things in our favor on that trade. So we'll see how all that plans out. And we got that binary even working in our favor. If it goes a little bit higher, then the binary could actually cover any loss on the short spread. I love doing hedge trades. So hedge trades are, again, one of my favorite strategies. because whether I'm doing stocks or whether I'm doing outright equity options or whether I'm doing binaries or bull spreads or whether I'm combining any of the above, I like to hedge my trades. So I like to lower my risk on a trade. And when I lower my risk on a trade, that just gives me the opportunity to basically have less concern, and especially if I can do a hedge where I actually make money if I'm wrong. And so those are the best kinds of hedges. And so that's like why we put on 4 long binaries to cover our short spreads. And you don't have to have too much of a move back up in the market there to be able to take advantage of that. So let's see here. Let me back these down. And I'll pull these charts off. And then we'll have them if we need them. So, and then let's see here. So we got back over here, we got oil again moving up pretty solid right there. And we'll see how the entire trade pans out by the end of, 2:30. So we still have about 50 minutes on that trade. And we don't have to have too much more of a move. We do want to make sure that we are always watching, of course, the current September futures contract there. But it's looking pretty much, on par, the exact same there. The September futures. And that's the futures contract that's being followed by the Nadex underlying market. And then with the hedge, you definitely want to know, definitely how to use the hedge, when to remove the hedge. If the trade's going against you and your hedge, and this is some important points here, if the trade's going against you and your hedge has actually covered the risk in the trade, and I had a trade like this last week. I was on euro-dollar, and I put on some spreads, and then I put on some binaries to hedge it, and the euro-dollar went against me on my spreads. Well, when the binary was actually covering the loss on my euro-dollar, I'm like, you know what? I've went ahead and I've taken the loss on that trade. Let's go ahead and just, close the thing out. I closed it out. I actually made $15. So anytime your hedge has covered the loss on your trade, don't wait. Close it out. All right. The other thing is, once you move that standard deviation, then you want to check that out as well. Looks like we got a caller on the line. We got Paul from Yonkers, New York. How you doing, Paul?
Great, Darrell. How's your day?
Hey, it's going great.
Just a question about the platforms. Does it make any difference whether you use Internet Explorer, or Chrome, or Firefox in terms of using the NADEX?
It really doesn't make a big difference. I prefer to use Chrome personally. I've tried all of them, and Chrome is faster. You can measure pretty much against any website, any kind of speed test. Chrome is among the fastest and most secure browsers. It also has a lot of great, very cool extensions you can plug into it. Firefox is a very solid, good one. Not a big fan on Safari. And, Opera is probably the best one, but it's one of the least used. And
which one is the best?
It's called Opera. And
Opera.
Yeah, Opera browser.
Because the reason I'm asking is I used Explorer this morning on the oil futures, and I was able to get in the trade but not get out of the trade.
What would happen?
I was able to get into the trade, but it started to move it against me a little bit, and I wasn't able to get out. It basically told me that I couldn't do the exit.
So I'd have to see the exact specs on it. Now, I've never had a problem getting out of a trade. You just have to, based on what price you're putting in. So what price was being quoted?
Well, that's just it. It wouldn't give me a price at the top. I mean, I was putting in a price, but it told me that I couldn't close it because I still have it on my screen. It says this market is not available for trading.
Okay, so there's two reasons that would happen. Okay, so let me pull this up and I'll show you what you're talking about. That actually wouldn't really be browser related. All right, so let's say you're not getting a quote like right here. Okay, like see where it has the dash. Because there's nobody who's willing to take on the risk on that trade. If it's at maximum loss, maximum loss would be one reason. If it's already at maximum loss, then there's nobody that's going to take the other side, so you can't get out of the trade. The other reason that could happen would be if the spread had expired out and you still just had it up on your screen. So, like right here, if I go in and I hit click refresh, it'll actually drop all the old spreads off and bring the new spreads up. And so that would be the other reason is the spread had expired out. So because if I leave this on and let's say past 2 o'clock and I have these trades up right here, they'll actually turn into a red X. And when it goes into a red X, either the market hasn't opened yet or the market is already closed. And it'll give me that error message saying, you can't really get in the trade. So because, it's over or it hadn't started.
Well, it's given me prices now, but on the platform it was given one price. Obviously, it moved against me a little bit, the decimal problem. I mean, I'm a big boy. I can take a loss. but it
Right.
wouldn't allow me to get out of it because on the platform itself, I was given one price, but on the ticket itself, it wouldn't give any price whatsoever and just told me that I couldn't close it.
Yeah, I'd have to see your screen to do that, or you could call Nadex. If you want to send a screenshot to me, you're welcome. You can send it to me at dmartin@tfnn.com.
Okay.
And I can look at it and tell you,
Yeah.
you know, but without seeing it, it's pretty hard to diagnose that. But I use Chrome pretty much exclusively. So.
Well, didn't they have problems? I mean, weren't they Google sued for tracking your personal data? I mean, if you're using Chrome, which I used before, now they get all kinds of other nonsense on my email, and, you know, it just, in terms of...
Well, what you're talking about is Gmail and Google Search. So I'm just talking about, like, just the browser itself. So the browser just, you know, if I'm going to Nadex, it doesn't mean anything. Yeah, they were sued on some stuff, I mean, but so is everybody else, Facebook, and, you know, they've closed a lot of stuff down. But it doesn't matter. Google was tracking it. Whether if you were going through Google Search, they were tracking stuff, whether you're using Firefox or Internet Explorer or whatever. So it didn't matter what browser you're using. It's just if you went through Google Search, they were tracking information, they were pulling information. And what they were doing is, for when they had their AdWords campaigns up, they were dropping cookies on computers. They were tracking things they weren't supposed to be tracking. And it had nothing to do with the browser itself. It actually had to do with how they are pulling information on user stats to display ads. So no matter what browser
I don't even use Google Search. I used any other search but Google, and I don't have that problem anymore. So I'm assuming if I go into Chrome, then I'm going to have those tracking problems again.
It doesn't matter if you're using Internet Explorer, you'd still have the same tracking issue. So it could still pull it. But they closed down most of those tracking engines because they got sued on that stuff and got it closed down. But you could also use Firefox. So, but I would use either Firefox or Chrome. If you don't like, you know, if you don't like Google, then definitely I'd go over to Firefox.
Okay, so how do I send the screen over to you? Just print out the screen and send it to your email address?
Yeah, you can do a print screen and then just paste it in there, or you can do a program called Snippet on your computer. And if you just type in Snippet, like in your search bar, you'll probably find it, depending upon what version of Windows you currently have. And Snippet you can capture a screen and then you just paste it into email and send it over.
Okay, thank you very much, Darrell. Good day.
Hey, you bet. Anytime, any question, let me know. All right, appreciate it, Paul. So let's go ahead and check out some other things. But yeah, all different browsers out there, and you know, I pretty much stay away from IA just because of it's slow and it's not secure. But yeah, all tracking, all browsers, doesn't matter as far as tracking goes. The browser itself is not the tracker. And let's see here. So one of the questions we got over in the Tiger's Den was, how long do I leave my hedge on? Well, if your hedge is, like I said, if it's covering your loss, then close out your hedge, okay, and close out the other side of the trade. Close both out, because you were wrong, and right now you can close it. That's a great trade. When you can close out and have no loss on a trade that went against you, get out of it. On the flip side, let's say you're profitable and there's barely any value left in your hedge, then leave the hedge on, okay? So that way, you know, if it goes, now this all depends upon what kind of hedge you're using. I'm talking about if you're using, say, like a hedge like on, you know, Nadex. Using a hedge on Nadex, then leave it on, because if it goes back, then it can make money for you. All right, so let's say I buy, you know, one oil contract, I sell 10 spreads, and let's say oil shoots up, and I've made more than what my spreads cost, and my spreads are at maximum loss. I can close my oil contract out, leave my spreads on. If it drops back down, I make money in both directions. And I'll talk about another method when we get back from the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this business and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, this is Darrell Martin here with the Diagnostic Trading Hour. One of the other things I want to mention is when looking at taking off or adjusting your hedges, you're going to want to do it on a daily standard deviation level if you're coloring stocks or dynamic collars. So that's definitely one of the methods you want to use. Looks like we got another call here. Got Bruce from Harrisburg, Pennsylvania. How you doing, Bruce?
Hi. I listened to you earlier. You were talking about the hedging with a bull spread in the binary. I wasn't in front of my computer, so I wonder if you could go over that again for me.
Yeah, basically the concept is if you can go in and put the hedge on, like let's say you go short, the spreads or whatever, and where you'd be looking at taking maximum loss or ideally within, like, say, on oil, like, say, 50 cents from there, then put a binary on to cover the trade. So if we go in and we look at, oil, and on this trade right here, it's going to have maximum loss at 94.50. So we can get as close to that as we can. We may have to probably go higher than that. But if we go over here, we go to commodities binaries, and then we look at crude oil. And then usually I'm looking at dailies whenever I'm doing this, because I want to, you want the ones that expire at the same time whenever you're doing the hedge. And so since the spreads I chose were expiration at 2:30, the dailies also expire at 2:30. And so I'm going to be looking at either a 94.50 or, a 95. So 94.50, if I put that on, then, that gives me a pretty big loss there. So I probably don't want that one. I can go over here and put that one on. That gives me a $80 profit, $20 risk. On that, when I put the trade on, we got in at $13 on the spread, and we did 4 of them. So what that did was basically gave us a $52 risk on the hedge. But if oil went up to 95 by expiration, then if it was greater than $95, then we'd actually have a payout of $348. So it would be a maximum loss on our spread, but which was $300 would be maximum loss on that, but make $348 on the binary. So that's one of the ways sort of to do it's a hedge where if it moves against you enough, then you actually have no loss. You actually have profit on the total position of the trade. Does that make sense?
Yeah, I guess on a bull spread, though, let me ask a question. On the bull spread, when it closes out, at the contract ending time,
correct.
Does it close out whatever the last price for that bull spread for if you were in it? Does that make sense?
Exactly. Yeah. Basically, what it'll do is when it closes at 2:30, basically, how does it settle out? What they do is, I'll tell you that here's the long, complicated formula. It's not that complicated, but they take the last 25 trades right before expiration, okay? Mm-hmm. And they take out the top 5 and the lowest 5, so that way those anomalies or something like spikes up and then comes back down, like in a millisecond. So they take out the top 5 and bottom 5, and they average the middle 15, and that's the closing price. And that number, those numbers come from Reuters, so it's not numbers from Nadex. So they get that number from Reuters, and then so let's say it expires out at, let's say 94. Let's say we sold this at 94.33 right now. Let's say it expired at 94.33. Then your payout would be, whatever your risk was on the trade. But yeah, it's exactly wherever it is. So if you hold it to expiration on the spread, then whatever the difference is between where you sold and you bought, that's going to be your risk or your reward, except for your risk will be, of course, capped at whatever the maximum loss is on the trade. So, right. Like on this trade right here, if you got in, say, at this point, you could go in, we actually could do less of them, and you could do 2 spreads, or you could do 10 spreads at a risk of 180, and but you could also do 2 binaries at a risk of $26. So if it did go up to $95, it would cover your $180, basically cover your $180 risk, $174 there. I guess you could do 3, $261, so more than cover your risk for $39 additional risk. So you're always adding on a little bit additional risk if you're hedging a spread with a binary. But if it goes against you and blows you out on your trade, then you actually don't lose anything. So it's sort of a nice way to balance things out in case you're just wrong. So,
yeah, right.
So hope that helps out. Thanks for calling in, and go ahead.
Oh, go ahead. I'll talk to you later. Thanks
for calling in. Give a call back tomorrow. Love talking to you. Have a great day. All right. See y'all tomorrow, 12 to 1 Central, 1 to 2 Eastern Time. Y'all have a great day.